Hi, this is Zak Mir with the Bulletin Board Heroes here at Fox Markets for Tuesday, the 8th of June. Starting up with Codal minerals on a day when there aren't too many situations, so a few repeats today. But here we've got this rising trend channel from the end of January, top of the channel heading towards 0.43, which hopefully could be hit by the end of this month, especially while we hold above the 20-day moving average at 0.26, or if you would prefer, the last peak in May at 0.28, but probably 0.26, the right stop loss there, ahead of a potential move there to 0.43 by the end of this month. On to the not so glamorous sounding Norman broadbent. Here we've got a situation where we had the pullback from that spike that we saw last month. Good support bouncing off old resistance. The April peak there at 7 pence, and the low, I suppose, for this month just around the 7 pence level. While we hold above 7, and especially while we hold above the 20-day line at 7.28, looking for further upside here, or at least a retracement of the pullback. Just how high the shares could go suggested by this rising trend channel that I'm attempting to draw at the moment. That's based at the 50-day line at 6.5 pence, and above that looking towards 11 pence. But ideally we hold around the 7 pence area ahead of a retest of that 11 pence area. And also that could or should hopefully be seen by the end of this month. Stock, which is not a great charting situation, but I suppose it's been in the news, so worth having a look at the moment. Nightcap. Here we've had, well, I suppose there is a charting basis for looking at this in the sense that we had a support area at 23 pence, broken for 2 or 3 days, so a bear trap, just long enough to give people the impression that shares are going to break down, but they've flipped back up, and that bear trap flip that we've got gives us the setup that while we're above 23, or at least I suppose while we're above 21 pence, the initial June low, we could retest the best levels of the year to date at 37 pence, hopefully by the end of next month. Also got bullish divergence in the RSI window, so we had the lower low for June, but there was a higher RSI low there for the oscillator, so that is a plus 0.2. If you like the shares, then I suppose the best case scenario target here would be that the stock is in a rising trend channel from January and could hit, I suppose, the 40 pence, low 40s area over the course of the summer. So something to cheer on for fans of that particular situation. Got a message on Twitter yesterday from somebody who said that you can't really do charting on Netscientific because of the stock split and the consolidation that the shares had, but in fact they behaved very well. We had the end of day close above 70 pence, which gave us the signal, the technical signal right at the end of last month, so around the 28th of May. The initial target was then 90 pence, followed by a best case scenario target of £1.10, which obviously was hit yesterday. I think the shares were around 110 or so when I looked at them yesterday, and I was going for a target as high as £1.60, and high today so far £1.65. So for a chart which is perhaps not well set up given the consolidation, the stock has actually behaved very well on a charting basis. Current situation is that we're guessing that £1.20 would be support for the shares on any pullback. That's an old December resistance line projection. The other thing to look at if you're a fan of the shares and hoping for greater gains, end of day close through 160 or 165, I suppose, could take the stock up to a new leg up towards the £2.30 level. But obviously, given how far and how fast the shares have travelled, you might have to wait a couple of months for that to happen. But the upside here above £1.20, obviously got a very overbought RSI at the moment at 91, so that might put one or two people off in terms of remaining in this situation. Perhaps the opposite situation is currently at Osirium, where it looks as though we're just getting underway in terms of the a recovery here. We had a one-day bear trap below the 21 pence level yesterday, sort of just maybe shaking out the weak hands, but a bullish divergence there in the RSI window, and also looks as though we've bounced off the floor of a broadening triangle from October at 19 pence. Probably what we want to see now is that gap held, so no end of day close back below 21 pence, or maybe 20 pence to be safe, and the clearance of the 200-day moving average of 23 pence could open up the prospect or the possibility of a move up to 36 pence over the next 2 to 3 months, but we really want to see the shares back above the 200-day line before getting too excited about Osirium technologies too soon. Stock which has been bubbling around for quite a while is Scancell, and here it looks as though the shares finally getting their act together after that little bear trap, which I think I identified a few days ago, below 20 pence. So just a little 2 to 3 day bear trap and then a flip higher. That suggests that the weak hands have been shaken out, a bit like the Osirium thing. And the view now is that we're in a rising trend channel for Scancell, top of the channel from back in September, heading towards the 35 pence level. And that could be seen perhaps as soon as the end of this month, actually, the way things are going, because it does look as though the bulls are starting to get into this situation at the moment. Stop loss, I suppose the safest one here would be back below the 200-day line at 17 pence. But as you can see, we've had multiple supports above the 200-day line, which normally suggests that a decent bullish phase is on its way. In fact, we haven't been below the 200-day line since last July. So pretty impressive build up there on Scancell for those who have been very patient. On to Tech Capital, which has had one of our sort of favoured technical setups here over the recent past. Here we had a gap to the downside, but the shares then flipped back and filled that gap, closed above that gap. So the gap down there in March, down below 14 pence. The notional entry after that was end of day close back above the top of the gap there at 14, so that we had that at the beginning of last month. Been sideways ever since, so it's rather slow, but the positive here is that we remained above 14 pence, and the other positive, extra positive, is actually that both the 50 and 200-day moving averages are rising, so that's a golden cross in the making. Typically, the strongest part in the technical cycle is the run-up to a golden cross between the 200 and the 50-day moving averages. As far as the setup or the configuration here, it looks as though we're in a rising trend channel from back in September. The top of the channel currently pointing towards 27 pence, and that could be seen as soon as the end of next month. Be cautious on the shares, obviously wait for a break of 16.5 pence, but with that gap close that we've had, looks as though Tech Capital is on its way, especially with that burgeoning golden cross as well. Stock which is relatively obscure but is starting to build quite nicely at the moment is Velocity Composites. Here we've got a nice flick to the upside. We've had multiple support points for the shares at or just below the 200-day moving average since the start of the year, so that's a tick. In terms of what or how high the shares may fly, looking towards the top of this rising trend channel that I'm drawing from back at, I suppose, effectively this time last year. Top of the channel there at 33 pence, and that's valid while we hold above the 20 pence zone, which is the floor of the channel and also the area of the 200-day moving average. So above the 20 pence area up to 34, 35 pence, hopefully as soon as the end of next month. Venture Life is a stock which I managed to avoid over the recent past, largely because it was sort of stuck in a range between 80 and a pound, or 80 and 90 pence actually. Current situation here is that we've broken through that initial February resistance at around the 91 pence level and 93 pence level, in fact, and an end of day close above 93 should be enough to take this stock on a journey towards £1.30, which is the top of a rising November trend channel. This stage only really back below the 50-day moving average and the floor of the channel, 87 pence, really questioning the upside scenario. But it would be nice to see the shares spike higher and stay higher, unlike the spike that we saw in November. So hopefully Venture Life will come up with the goods on this occasion. One of the favourites of the recent past for many has been Zephyr. Here it's been a great bull run, absolutely fantastic. We had the start here with the break of that December peak there at around 105, and the net shares have never really looked back since then. The question now is really how far and how high the shares can go. Rising trend channel here from, I suppose since the stock started really. So looking for a journey towards the top of that September trend channel at 5.5 pence. And that's valid while we hold above recent support and maybe the 20-day moving average at 3.3. So above 3.3, looking for 5.5 as soon as the end of next month. The other point to note is the way that the shares are way above their 200-day line. So multiple support points above that should make for a decent move to the upside, maybe even a gap to the upside at some point as well for Zephyr, looking pretty strong indeed. Always good to see the bears get burnt on a stock or wrong-footed, and that comes in the form at the moment with Zoetic. Here we've got a situation where the shares did break back below their 200-day line and but also below the 50 pence level. But the giveaway in terms of the latest move up from 45 pence has been the way that they were too strong to fill the bottom of that gap down to 41 pence. That one left in November, so that's a plus there. Not quite out of the woods yet. Maybe you want to see a weekly close above the resistance line there from March. A weekly close above 55 pence. Even better would be a weekly close above the rising 200-day moving average at 58 pence. That would at least take us hopefully back towards last month's resistance around 70 pence. So just the start of the possibility of a new leg to the upside for Zoetic. The other plus point, which you might not have noticed, is the bullish divergence there. So we had lower lows, a couple of lower lows there, but actually higher RSI lows in the oscillator window. That does suggest that the momentum is building in favor of Zoetic at the moment, with the break of that falling wedge as well. So let's see how we do on that over the near term. That's it from me today. More updates tomorrow.